Dear friends, I welcome you for today's topic difference between journal and ledger. I am Professor Muralidhar Prasad, a professor in banking and finance area. I request you to subscribe my videos and also like my videos and share my videos. Today I will be discussing with you the difference between a journal and ledger in financial accounting. Let us first understand what is journal and then the ledger. The journal is writing journal is the first step of recording transactions. And we in our previous video we have already understood what's an event, what's a transaction. Any event that has a financial impact, we call it as a transaction, and in journal only transactions will be recorded. In the journal, the accountant debits and credits the appropriate account and records the transactions in the books of accounts. Yes, the transactions will be recorded in the books of accounts by the accountant. For this purpose, the double entry system is used. There is a concept like double entry bookkeeping system, and the understanding of a double entry bookkeeping in a simple way is every debit will have equivalent amount of credit and vice versa. So this is how the journal is explained. So journal is primarily recording the financial transactions. On the other hand, what's a ledger? Ledger, for making ledger, the accountant creates a T format and key in the data from the journal in the appropriate order. That's what. So this is a first step, whereas the ledger follows the journal. It may be understood as ledger is a continuation of journal. So from here, the entries will come here. So this is all transactions are recorded and all such transactions are segregated and posted in different ledgers. And the ledger looks in a T format. By using ledger, we create a trial balance, income statement, and balance sheet, etc. So this will result in a preparation of final statements, whereas a journal is not like the journal only recording the transactions in the appropriate books. Now, this is how the journal looks, and this is the ledger looks. What is the journal? How it looks? So, journal has got certain columns like date, transaction details, and account reference. Account reference is from which book or which account you are paying, posting this information in journal. Then that's debit, that's a credit. For example, let us see one first entry. This transaction happened on April 4th. April 4th inventory, and this inventory value is 10,000 rupees. So you have debited 10,000 rupees to inventory account and credited bank account by say 10,000 rupees. I already told you this is a bookkeeping, double entry system. So there is a debit, there is a credit, and equal amount of debit and credit is also there. So what is the meaning of this transaction is purchase of stock. So the narration, the explanation for this entry is also recorded in the journal. So it means inventory is purchased worth of 10,000 rupees by issuing a check. This transaction let us look at. April 5th, office furniture 800 rupees debited and bank account 800 rupees credited. It means you paid money for purchase of furniture. See, the narration is given purchase of furniture. Similarly, on April 14th, there is another transaction recorded in our journal. Salary account is debited by 1 lakh and credited to bank account. It means salary is paid. Salary is expenditure. You have debited this, and the 1 lakh rupees salary is paid by crediting bank account. So this is how the journal looks like. Whereas the ledger, as I said, it is made like a T shape. See, like this, a horizontal line and a vertical line separating debit credit. Here we post the information from the journal. For example, the same entries I have not posted. I posted different items for your easy understanding. So here on 1/1/2020, paid a salary of rupees 1 lakh. So this is a cash account. You are posting the information from journal to cash account. So this is a ledger. So from journal you have taken all the data into ledger. So this is a transaction that has happened on 1st January 2020. You paid salaries of rupees 1 lakh. Similarly, there is one more entry. If you go through your journal, you will find this information. On 10th January 2020, there is a sale worth 5,000 rupees per cash. So this is a sale is credited, whereas the salary account is debited. Sale account is credited. This is another account, inventory account. On 15th January 2020, two cash means inventory account debited here to cash account. So 2 lakhs cash you paid and you got inventory. So this is how the ledger looks. This is a journal, this is a ledger. So journal is the pre-requirement for a posting into ledger. So in journal, all entries irrespective of the nature of means we don't see a specific order. We go by date wise and transaction reference wise, and we post everything in journal. Whereas in ledger, specified accounts, for example, as I shown here, cash account separate, inventory account separate, means all the information from journal we take and post into ledger in separate account. That's how the journal and ledger are differentiated. So thank you very much. I request you to please subscribe and like my videos and also share my videos. So I'll be meeting you in my next video. Thank you very much.